Hi guys, this is Simon with Trade and Perform Coaching, going over the trade review for, let's see, today was Monday, November 18th. So this is my first day back from my little hiatus I took, and I'm usually a little rusty my first day back, but let's kind of go over some of the things that we talked about this morning. So if I posted the pre-market review that I go through with my clients, and we talked about looking for good rotations. We talked about being cautious on the short side after 9:30 or 10 a.m. And we talked about how we wanted to focus most of our trades earlier in the day, and that the last hour would be difficult to trade at. And normally that's my stance, is that the last hour can provide a lot of surprises, and that we wanted to take trades after we had strong rotations. And also we wanted to be cautious of open drives out of the gate. So let's kind of look at the open here and get an idea of what happened and kind of go through. So on the open, you'll notice we did get an open drive, but it really wasn't that strong, right? We did open up and we did drive higher, but we drove right into a resistance zone. Basically it was 1799 to 1801. And you can kind of see it just started to peter out. Another clue there was, if you looked at the tick just simply was not that strong. As a matter of fact, after we opened, I'll blow this up just a little bit to take a look. But after we opened, you'll notice we opened up over positive 500, but as we rose, right, the tick actually started going down. And that's usually not a sign of a open drive. Usually it's just the inverse. We open up and the tick either stays extremely strong or it opens up negative and continues to rise. So the open drive out of the gate was kind of off the table at that point. And then if we talked about rotation size in that video, we were mentioning we want 6 to 10 points of rotation at a critical location, meaning a zone, right? And if you look, we opened up about 4 points, and we drove in till we were about exactly 6 points up from Friday's close, where we met responsive buyers. I also mentioned in the video that 1800 is a pretty important psychological area, and I would certainly expect responsive sellers there the first time, and that's exactly what we got. Right? You eventually had a rollover all the way down to, in the morning at least, down to 1792.50. So that was roughly a 7-point roll to the downside. Again, when I'm coaching clients, one of the things I recommend is that our initial targets are always around 8 ticks. Now, we're not trying to grab a home run, and there's lots of reasons for that, but mostly we want to be sure that we get our profit. If we're trading very small positions, that we lock our profit in early. If we have a big enough position where we can leave trailers, then you can go for the larger trades. But it's hard to grab 5, 6, 7 points. It's the rotation in the ES is not that large on most days. And what will happen is if you focus on always getting a 5 to 10 point move, you'll find yourself getting stopped a lot. Instead, I focus on where is it that I have the highest odds, meaning the zones themselves give me an edge. Okay, and then I go through and I add other filters in there that increase that edge or increase my my edge as far as trade location goes. And so we'll notice that we came when we rotated back down into this zone, and this rotation here from zone to zone immediately gave us about 3 points in the bag. Excuse me, I just moved that, but it was sitting right there. And then if you'll notice the size of the rotation, it was only a 4-point rotation here. So I would not have necessarily been looking for a long trade right in there. Again, I key off rotations. They're very important. The size of those rotations and where I'm keying off of them will shift from time to time. But we got a beautiful rotation down, and the back of this zone provided great trade location. Most of the time it requires a 2-point stop from the back of a zone, and that 2-point stop would have easily kept you in this trade for a beautiful rotation back up almost to this zone. So simply by knowing where the high probability trade location was, plus you add the rotations and you add in other factors. For example, on this last move down, given we were already slightly past the zone, but you can see a clear tick divergence here. Right here, we got a new low, but we were not able to achieve a new low in the tick, and that's on a 5-minute bar. Oftentimes I'll use a smaller time frame than that to identify the tick. And then the last piece was of the morning session, right, was after 9:30, we tend to get a grind up to the upside. Now, I know I was following Twitter. I know there's some people who claim to have shorted right here and held all day long. That's just not my trading style. It's not what I'm trying to achieve. But what we were trying to avoid was taking shorts prematurely here and taking shorts into this 9:30, 10 a.m. area and holding those shorts. And if you look at what the results were, right, we wanted to wrap it up before 10 a.m. if we could. Look at the grind that this took, right, all afternoon. This is where a lot of traders get trapped in frustration, right? Because they're trying to trade. If you shorted early, you got squeezed right up. Most traders are trading with less than a 2-point stop on ES. Okay. Secondly, even if you had shorted properly, it took from 10 a.m., right? You got an okay rotation down, but to get this big break over here, took from essentially 10 a.m., or if you shorted earlier, 8:45 a.m., all the way over until really 1:45 in the afternoon. Now, my trades call for generally not taking trades in the last hour. Why is that? It's not because there aren't trades that are valid in the last hour. It's because of this type of trade action that can take place in the last hour. This right here, this is from 1786 essentially to 1790, okay? And it whipped back and forth continuously. And placing the trade just slightly wrong will snag you in a stop out really quickly. Now, obviously in these videos, I'm not talking to the accomplished master trader here. A trader who is trading on a very high level and understands exactly where support zones are, exactly where the tick divergence is occurring. Look, you could have placed a trade in this zone. You had a great rotation. We were very stretched from where we broke down. That is great trade location, but it took place in the last half hour. So if you look at it from a psychological standpoint, you basically had 30 to 45 minutes to make the trade work, and everyone else did too. So now you have a lot of people with a lot of pressure, either trying to get the rotation back up, trying to get out of longs that they're trapped in because they assumed we'd close near the high of the day. And in addition, this entire sweep to the downside was brought on by a comment by Carl Icahn on CNBC, which I don't watch. I found that out later. I generally don't watch the news in the day when I'm trading. I find it to be a distraction. So mentally, when you're setting yourself up, right, you're trading in an area where there's a lot of unknowns going on, and there's already enough unknowns in the market to begin with. Secondly, this is a big rotation down, right? All kinds of emotions can come in. You might think, well, we're going to tank right into the close, and short, you got smoked on that idea, right? You could think, well, we're going to rotate all the way back up and get squeezed. But look, if you didn't execute right, and you only had a very brief time to execute in this range, it kind of whipped in and whipped out very quickly. You can see the body of the candle is actually, the majority of it took place outside of the support zone. And then the third part of that is we're trading below Friday's low at this point, okay? So I guess if you got it right, you could say, hey, look how well I did and I nailed this thing and no problem. But the majority of problem traders, or the majority of traders who suffer from break even, meaning one day they nail it and one day they miss it, is because they are constantly trying to figure out what the hell the market's going to do next. And they have no idea what they are going to do in response to it, right? The reason I'm able to turn traders from struggling traders or break-even traders to consistently profitable traders is because not only do we know our entries, we know our stops, and we accept them. We don't mess with them. We accept the stops, and we know exactly where we're going to exit this trade and how we're going to exit it. And so we're never worried about trying to catch this. If we get it with a trailer, fantastic. But our objective is never to try to get it. Instead, we want to focus in the high probability areas that take place in the morning, give us nice, easy rotations, and all you need, I can't emphasize this enough, is 1 to 2 solid high odds trades a day and keep stacking that up day by day by day. And I've got guys that do that consistently, day in, day out. Is it making huge numbers? No, not in the numbers themselves, but because they can stay consistent in very high odds trades, they're able to consistently increase their trade size. So they're not looking for more trades. And every once in a while, if they, knock the ball off, the cover off the ball and they get a home run, that's great. But it's never our intention to go in and do that. It's always our intention to focus on high odds trades with great rotations. We look for tick divergence where it's available, and we're always trading at those zones. You put all of that together, and regularly getting 2 to 4 points on a trade is highly, highly doable. And there's professional traders that would give their right arm to regularly hit 2 to 4 points on every single trade that they take, and happily only take 1 or 2 trades a day because it's all you need. So that's what I've got for today. If you look, I do want to point out one other thing that was important. In the pre-market video, which you'll find just below this review, and it should confirm everything that I've told you so far to this point. I did point out that we have this trend, right, coming into the day, that I thought that there would be responsive buyers the first time in at this 1792, and that's exactly what we got, right? But if you look at this trend, right, we formed a beautiful wedge here, and I put this chart up around lunchtime, I believe. I'll have to look on Twitter to see exactly when I posted it. But you can see we got responsive buyers. We had tick divergence in here if you'll go look at your tick, right? And so this provided one or two things. First of all, if you had a short, great place to cover. Secondly, this was the back, just below the back of the zone, which was right here. Great trade location for a long, right? And just to show you the opposite, let's say you had someone who thought, oh, we are going to roll over. We've hit 1800 and it's all over. And they shorted. They went ahead and let their emotions get the best of them because they didn't have a trade plan, right? And they couldn't stand to see the trade go without them. The problem trader is shorting right in here, or he's shorting right here, right? Because he's missed the optimal trade location up here. And he's then getting squeezed all the way up to where the prime short location is, right in here or right in here. Same thing with this break here, right? We get emotional, we miss this break. We don't have the discipline to wait for it to come up for a backside test or even a second test of 1800, which, there was no damage done here, technically speaking. There's just no damage here. And we could easily be right back at 1800 tomorrow. So if you were eager and you shorted late, anything shorting below this 1792 area, right? I suppose you could have shorted as late as 1790 and still made a little bit of money. But man, that was just such a hard way to make money when you could have simply waited. And unless you caught the break right here, just wait. Let it come back up and retrace. It's going to come back up into this high odds. It'll come back up into 1794, right? Retest this area, or we're going to retest the 1796, or then finally 1800, right? Just let the market come to you. This is one of the few days that we've had down, and I've been pointing out, yes, there have been down days. And yes, they're very quick and brutal, just like this, where we just get liquidation moves. But they've been so short-lived. And the following day, there's been absolutely no follow-through. If you'll let the market break down significantly to where there's actually technical damage, you can then start shorting these rallies with aggression. But as long as you find yourself being a trader who's trading without a plan, without a goal, meaning without not only an entry and a stop plan, but an exit plan, right? And you don't have a clear-cut idea of exactly what it is you're going to do, you'll keep going through these cycles where, yes, you make a lot of money, but then you can also go through cycles where you're giving back all that money that you made, and net, an extreme amount of frustration. So I would encourage you to, A, have a written trade plan. Everyone should have a written trade plan, and that plan should include an entry, an exit, and a stop. The other part of that is verify that you actually have an edge. Does your trade location, whatever it is you're doing, is it actually providing you with a true edge, or do you think it's only working right now and you're not sure? Most people who think they have an edge don't actually have an edge. And then stop following everyone blindly. Learn to pick your trades for yourself and not be reliant on someone else's trade call. So anyways, this is Simon with Trade and Perform Coaching. I sure hope I helped somebody out there. I hope everyone had a great day. And I look forward to doing it all again tomorrow. Have a good night, everyone.